So I am back. This is my first video I've recorded since Saturday. I'm sure some of you guys that follow me on Instagram would have seen that I had a few days off. I took a holiday to Amsterdam, but since I've been away for the last few days, there's been a lot going on in the stock market. So today I'm going to use this as an opportunity to just talk about some of the news stories that have come out. And there's been some shocking things. There's been some things that I've seen happen in the last few days that I've been away, and I went, I'd love to make a video on that. So I'm going to stick it all in today's video because there's a few things that I saw and I went, that doesn't make sense. Like, what is going on in the market? And today we're going to talk about a few of those things that happened, because there was a few. There was some to do with the general inflation. There was some to do with some individual stocks, some earnings. So I hope you enjoyed the video. Let's get started. Now, just to let you know, if you are on Patreon, I did drop an exclusive video on the weekend, which was the stock request. This is where we looked at gaming realms. So this was voted by members of the Discord, where they vote, and the one that gets the most votes, I take a look at the stock and I say my thoughts and if I would buy the company. And this week's winner was Gaming Realms, so it's a good video to check out if you are interested in a UK company. But let's get stuck on today's video. So the S&P today, as recording this video, is actually putting a bit of a recovery day in. The S&P is up slightly. This follows yesterday's move where the S&P had a bit of a drop off. We can see here it was down 2.38%, which is a fair big move. But saying that, it's still up 5% year to date, which is very crazy to say, given the fact that we are still only in February and it's up 5%. The Nasdaq as well, you're able to see here that also that had a drop off of nearly 3%. But same again, as we look at the Nasdaq today, it's having a bit of a recovery day. So some of those losses that it's had in the last few days have kind of pulled back a little bit, and we're about halfway where we were on the drop off of the Nasdaq. And on the S&P, you can see we're about halfway recovered from where we were. Now, what was caused by the drop yesterday was the inflation data. The inflation data came out and it was at 3.1%. A few people were expecting 2.9, some were saying 3, some were saying 3.1. It was a little bit mixed this time round, but we were all kind of expecting this 3% range. Now, because it was, from what I could see, the general consensus out there a little bit higher, and the market decided to freak out, going, oh, it's 0.1% higher than what we were wanting. It was like, come on guys, like there's no need to make that much drama out of a 0.1 difference in the stock market. And a few people saying, well, if it's a little bit slower coming down, the Fed are going to not cut rates. The Fed aren't really bothered about this month's data. The big thing they'll be looking forward to is the March data. We've got a month until the Fed meet, and that'll be the latest data they will get, and they'll get that on the 12th. So realistically, this inflation data was a free pass, and it was still a good batch of inflation data showing that it was cooling down. They only missed by 0.1. The market reactions were absolutely crazy on the markets yesterday, in my opinion, and too many people making a drama out of a 0.1 miss. Realistically, I think the market just was having a bit of a cooling off period, because I think it needs it. The S&P is up 5% year to date, guys. This is crazy. Like I'm going to say it here. I used to think we were in like an okay place with the market. I now think we are tilting into the overvalue territory, and I know I can't believe I'm saying that after the last 2 years, but I am feeling like we are getting into that overvalue territory. I am seeing the market getting a little bit frothy, and there's evidence of that later on as well that I'll talk about. And I was actually looking at stocks to potentially buy, and so again, I wasn't really seeing that many opportunities, especially in the US market. I was hardly seeing any opportunities in the US market. In the UK market, I'm actually still seeing a few opportunities out there. But on the US market, it is coming a lot slimmer to see some opportunities out there. So I think realistically, the inflation data was good. And if you actually look at true inflation, there's going to be a big drop coming in when we get February's data as well in next month. But realistically, I think there was a big overreaction about that. So yeah, I think that was an excuse to take some profit off the table, in my opinion. We then saw the UK. The UK has had a very good day today as the UK inflation data came out. The consensus was 4.2. It actually came in at 4. So a little bit of a bigger miss on the expectations, but a good miss. Same again though, I don't know why the market's getting too excited about it, because realistically, we can see the deflation trend that is there is happening, and we are going to see the 2% range this year in inflation. So even if it comes in at 0.1 a little bit higher than expected, or 0.1 lower than what's expected, it's all blown up out of proportion, in my opinion. Now, anyway, getting on to the frothy market part, I am seeing a bit of a frothy market back out there. I was looking at ARM the other day, and we mentioned it on, I think it was Friday's video, but same again, it just continues. Like, this was an IPO that everybody was saying, like, it's a bit of a rich valuation when it IPO'd. And since then, the IPO price in 6 months has now doubled. And we're looking at this, and I remember showing you guys the earnings and going, look, the good earnings, I can understand why the stock is up, but does it deserve to be up this much? Does the stock deserve to be up over 100% in 6 months? I was like, I think it's a good company, but once again, I kind of get those frothy vibes of when we were in 2021 and we saw those IPOs happen, and IPOs and SPACs, and they used to go up over 100% in the first few months. I don't know, I just thought that once again kind of goes back to the opinion of that I'm seeing that kind of frothy market out there. Another example of that was Robinhood. Robinhood having a great day today. The stock is up 14%. And they brought out an update. They said they posted a surprise profit, interest rates, income boost, and also trading rebound. Even Robinhood is saying they're seeing trading come back to the platform. And there's so many points I want to make about this. It's one of those that, isn't it typical that the retail investors come back now? Like, where was the retail investors like 2 years ago? That's when everybody wanted to be getting into the market. When we were in these dips in 2 years ago, this is when everybody wanted to get investing. But we're back at all-time highs, and it's like all them retail investors come into the space. It's like that situation where back in 2021, where people that you never heard mentioned about stocks were mentioning, are you buying Bitcoin? And the dog coin, or whatever the dog coin was. And you're getting people that weren't interested in stocks wanting to buy stock, and it was at all-time highs. A year ago, nobody was interested in stocks, and now we're getting back to all-time highs again. And it seems a little frothy because, people are clearly joining, or retail are coming back because people are going, oh, the stock market's doing very well, and last year I made so much money, oh, I'm going to get in as well. It kind of gets that frothy vibes when you see even like the likes of Robinhood saying that they're seeing a big rebound at the moment. So, good numbers for Robinhood, but I just thought it was another indication that retail is really coming back, and as always, it comes back in at the top of the market, not really the bottom of the market. Well, it might not be the top of the market, but when the stock market is pushing higher valuations and all-time highs, it is typical. And I've seen this myself. I've seen there's been a big explosion of new members that are wanting to get into the stocks. But it's very hard because a lot of the comments I'm seeing from the new people that get into the stock market is going, can I still buy DraftKings even though it's up 300%? Can I still buy Hims and Hers even though it's up 300%? Would you still buy it? And it's like, oh, this is... Those are the sort of questions I can't answer. But that's what we're kind of seeing. Lyft, this is crazy. The stock is up 31% off their earnings, and I don't know if you saw it, but they put a major error in their earnings release. I can't remember, it might be down here somewhere, but I believe they put the point in the gross margins wrong. So, yeah, it actually says here, so it said it misstated its margin expansion. Rather than 500 basis points or 5%, it was actually 50 basis points, 0.5%. Someone put the point in the wrong way, or put a point that didn't need to be a point or a dot, or a decimal place. I'm just trying to be grammar perfect here. But yeah, I was like, that's crazy. Like a stock makes a big error like that, and the stock went up 60%, I believe it was, when they brought out these the numbers originally, and then eventually they were like, oh no, we made an error. And yet the stock is still up like 31% today on a company that just did a major error on its financials. And then I was looking at the financials of Lyft, and I was like, yeah, they're okay. Once again, I looked and went, yeah, they're okay, but I don't know if the stock deserves to be up this much. Earnings per share, 80 cents versus 8 cents expected. Yeah, I guess that's a good beat. Revenue was basically in line. So yeah, fair enough if it has a bit of a lift, but I don't know if it's that much. I guess the big thing that you could maybe say about Lyft is that it hasn't really joined in the stock market rally as other stocks, so maybe that's the reason why. But yeah, I thought that was crazy. InMode, we saw InMode have a drop of 10%. I looked at these earnings, I was like, I don't think they deserve to drop. Like, the EPS was a good beat, revenue was a beat, and this is all during a time frame when higher interest rates are killing them. You look at a lot of other companies that are higher interest rate companies and how much they've suffered, like Tesla, for example. Yet InMode is still doing pretty well on a financial point of view. They're not having to discount the products massively to keep selling them. They're just kind of going, hey, you know what? We're going through a slow patch. We're not discounting them. We're still going to make loads of good profitability. and then when interest rates start cooling down and we sort them out, we'll have, you know, really good growth again. I've not listened to the conference call yet. I'm going to do that a little bit later. I've only just recently got back, but there's a few that I need to listen to. But yeah, same again. I was like, yeah, good numbers, and then you have this stock then rewarded by a 10% drop, which is crazy. I mean, maybe the reason why is that it was already having a pretty good year. The stock was up 19%, but I mean, it's realistically down at 11 times earnings, and it was really strange because you've seen these kind of companies like Arm that's skyrocketing, Lyft that's, you know, skyrocketing today. And then you've actually got a company that brought out decent numbers and beat on numbers, and it's only 11 times earnings, and it's not really had that much of a run up this year, or even last year. It was negative 38%, and then it went down. I was like, but then again, InMode always goes down after it does its prelims and then it does its actual earnings, so maybe that's just historically fallen in correctly what normally happens. I mean, Shopify. I mean, I looked at Shopify and I thought, these are good numbers. You know, EPS as well, beat by 0.10. Revenue as well, back up at 25% growth nearly, beat by 40 million. I was like, you know, Shopify's back. You know, this is the numbers that we expect from Shopify, and it was really good to see. And then we're looking at Shopify, and they came out, and their numbers were, and their share price was down. We saw a big drop on Shopify by, you know, 10%, and maybe it was to do with the inflation data that dragged it down more. But once again, I was like, these numbers don't deserve to drop. I mean, maybe it's one of those that it's just had such a good run up. You know, it was already up 55% in the last year. Year to date, it was already having a pretty good year. So maybe it's just having a bit of a, you know, it was up 26%. So maybe it's just having a bit of a callback from the run that it's been on, and the valuation catching up a little bit and the numbers catching up a little bit. And maybe that's why Shopify is having a bit of a cool down. But yeah, I mean, ultimately, like, I'm just trying to, I was looking at the market going, there's just so many things that don't make sense to me right now. Like, there was a lot of sensitivity around inflation's data just being a little bit better or a little bit worse. I was looking at frothy share prices going up a lot more than what they deserve to do. I'm looking at stocks that bring out good earnings going down, and looking at them thinking, are we just at a place now where share prices have gone so high? The only way that these share prices will go higher off earnings is if the numbers are absolutely insanely high. So we're actually having a bit of a cooling off phase. I don't know, there's just so much weird stuff going on there in the market, and ultimately I look at the market going, I think we're just a little bit burnt out. I think that's what's going on with the market. I think we're just a little bit burnt out from the S&P running up, you know, Shopify bringing out good numbers, but yet the stock goes down 10%, or even more. I think, what was it, 12%, 14% on those earnings. Maybe the reason why it's just having that cooling down phase is because before that, the stock was actually up 22% year to date. But yeah, there's a lot of strange moves going on in the market, and I think it's just some adjustment going on, because I think we're just getting a little bit frothy there, and I think we're just having a bit of a cooling off phase. But there's a lot of things that you need to look at individually at the moment, and take them case by case to kind of see why the moves are making sense. And some of them do make sense. At the same time, I think you look at some moves and you're going, like this one, and going, I don't know why that's doing that. And there's still some of those moves where you're like, that don't make sense. But what I would say is that all those that thought we were in a bear market or going to have a bear market, I definitely say that's not going to happen. We're definitely in a bull market, and there's definitely that kind of greed and frothiness coming in, the most that I've seen now for 2 years. And ultimately, I guess that kind of leads me to how I just adjust to that now, because, you know, I've been here for making videos on this YouTube channel through the full bear market, and obviously now we're at the other side, and it's great looking on my account every day and going, oh, look, another green day, oh, I'm up so much, apart from the other day. The other day which were yesterday, it seems ages ago now, but yesterday, you know, when that day happened, obviously that was I think my account was down like 3%, but apart from that day, the other days it's just been like, oh, another 1% today, up another 2% today. And it's been great. It's been great after the last 2 years to go, oh, this is really good. But there's a point where you go, are we just going up a little bit too quick? And also from a point of view is that I've been used to buying stocks at so cheap valuations that you look at some of the stocks now and I go, I don't really want to buy that. Yeah, I don't really want to buy Shopify at $78 anymore. I don't really want to buy DraftKings at $44, whatever it is at the moment. So it's definitely a change in the guard situation. It's definitely a different environment that we're in, and it's adjusting to that from where we were in a market 2 years ago when I was, you know, making these videos saying, you know, this is very bearish, to a market where, you know, them times where we had. Do you remember when we had companies that reported, you know, they were at 52-week close, and they were reporting numbers, and the numbers were amazing. They were hiking up the outlook, hiking up the EPS, hiking up the revenue. And do you remember they used to go down 10 or 20%? And now we have companies that are like bringing out okay earnings or good earnings, and yet the stocks are going up like 20-30%, which is insane. But at the same time, we've got stocks that are reporting good earnings are going down. But at the same time, is that just because we've been, so overheated right now? I guess at the same time. So yeah, I think overall, I just wanted to say that it's quite shocking to see like what situation we're in. We're at such a different environment from where we were 2 years ago, to where the momentum was negative to where we are very, very positive at the moment. And I was just making a video to say that there's definitely some adjustments to be needed. And for me, my game plan has to be slightly different now, because the opportunities out there are definitely getting slimmer, and it's being more selective on the opportunity. And like I said, definitely with the US market, it's definitely been more selective, but with the UK, I'm definitely seeing a few still there anyway at the moment. So yeah, that's the video anyway, guys. Hope you enjoyed it. See you in a bit.